Like other parts of the Midwest region, job production is slowing down in Milwaukee, but the apartment market stats continue to look solid. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Milwaukee update. In 2012, all across the Midwest region, we saw job growth numbers boosted by a mini rebound in the manufacturing industry. That boost, though, is starting to wear off, and we've already seen job growth levels diminish in several key markets, and Milwaukee is among them. Milwaukee's metro area added just 1,700 jobs through Q2 2013. That's an annual number, and that was the metro's weakest growth in 3 years, well below the peaks of around 9,000 jobs being added annually at a few points in the past couple of years. And indeed, manufacturing is contributing to the decline. A year ago, manufacturing jobs were up by nearly 4,000 jobs annually, but as of Q2 2013, manufacturing jobs were actually down by 600 annually. But the slowdown in job production hasn't dramatically affected the apartment market. Occupancy did slide 100 basis points in the past year, and that may be tied back to the economy. But it's not especially concerning because occupancy is still very tight here at 96.8%, the 10th best rate nationally among large markets. And occupancy in Milwaukee is almost always very tight. There just isn't a lot of institutional grade product in the Milwaukee area, and they've not added a lot of new supply over the past 2 decades or so, and that lack of supply has kept vacancies at a minimum, and that's a trend we see across the Midwest and the Northeast in many markets. Now let's switch gears to rents. Same-store rental rates for new leases increased 2.9% year over year through Q2. That's a very healthy number, right in line with a Midwest regional average and just a couple of ticks below the U.S. norm. And you can see, though, that growth is coming in below the peak levels that we saw in 2011, but that's a trend that we see in most markets nationally. And let's highlight a key submarket for you, the urban core, downtown Shorewood. This is one spot that's getting particularly strong rent growth. Rents up 5.1% year over year in that submarket, and occupancy in exceptional shape at 98%, up 40 basis points year over year. Now, for the Milwaukee Metro overall, we think this market is likely to see fairly modest economic growth over the next year, so we may see rent growth levels slide back to around 2% annually, but as usual, we think occupancy rates will remain tight. And on a personal note, I'd like to close with a shout out to the co-creator and producer of this show, Pat Beckman. Pat recently retired from RealPage, and he is adjusting to a much slower pace down in the Texas Hill Country. And Pat's, of all the 300 plus episodes we've done of this show, Pat's favorite was the one on Milwaukee from a couple of years ago. And Pat's also a guy who always appreciates a good blue tie. So Pat, this one's for you. And for everyone else, thank you for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.